94.9 WDKB. It's Sean from the Morning Show, and I am joined today on our webinar with the Small Business Development Center. I've got Jock there. Hello, Dr. Jock. How are you today?
I'm doing well, Sean. Thank you.
Also have Mark Kerman from Siepert Company. Mark, thanks for joining us today as well.
Absolutely. Thank you for having me.
We've been talking about a lot of things on these webinars, and today we're going to talk a little bit about business structure, and I'm going to let Jock and Mark kind of take over from here. But guys, you want to explain a little bit just about what some of the business structures are that people face when they own a business?
Well, let me just jump in and then I'm going to hand it over to Mark. But, as we see businesses that start up, one of the first things they're thinking is, I need to pick some kind of business structure for myself, which I don't think is necessarily true. I always like to say, why don't you make some money first, make sure it's a business, and then kind of use that money to do these other things, like choose an entity, kind of figure out what the best one is. It kind of legitimizes the business, although sole proprietorships, which is an entity, if you don't do anything, is what the majority of the people, small businesses anyway, have. Mark, you want to add anything to that? I'm sure you're going to add a lot to that, actually.
Yeah, and I'm in agreement with what you're saying on that end. So basically, what you alluded to is, okay, well, you don't have to pick a business structure, but technically you have a business structure the minute you hang up a shingle. And that business structure is that you're a sole proprietorship, unless you take steps in some other fashion. So basically the minute that you say, hey, I want to start operating a business, you are a sole proprietorship. And everything that you do from there on out in legal terms is done as a sole proprietor. And as a sole proprietor, and I'm not an attorney. Let me make sure I preface this by saying I'm not an attorney. I'm an accountant. So a lot of things that I'm going to be discussing are going to be more from the accounting standpoint. But for the sake of discussion, legally, you are a sole proprietor. And then taking that perspective from the tax side of things, well, as a sole proprietor, that's going to get reported on your personal individual income tax return. It's going to be reported if you're a sole proprietor operating in a general business. It's going to be normally reported on a Schedule C. That'll be on your individual income tax return. That income is going to be subject to normal taxation, but in addition to that, it'll be taxed with self-employment taxes as well. Jock, am I okay to go forward and explain what self-employment tax is, or am I getting a little too deep?
No, you're not getting too deep, but I just want to back up a little bit. So, Mark, I think what I'm understanding you saying is, in order for me to be legitimate, and I'm using the air quotes here, yeah, I do need to file, I do need to show this income someplace. Is that correct?
Sure. Absolutely.
However, we both know that businesses just starting out normally don't do that. And none of us on this show are condoning that. We're just talking about the reality of the situation. Okay, so go ahead, Mark. You now can continue now that I've thrown that into the game.
All right. So essentially, you're operating as a business. You want to report it. It should be reported along with your general income taxes. When you do so, you want to make sure that you do a good job of accounting for all of the income and expenditures that business incurs.
So, Mark, let me just jump in there. So I run a business out of my home. What legitimately, if I'm going to put that income in there, what legitimately can I use for expenses? Now, just again, Mark did say he's not an attorney, he's an accountant. So this information he's giving us is absolutely 100% correct. The legal forms are a whole another story. But so if I'm going to claim this income, Mark, what can I claim as an expense against that income?
Well, you can claim let's start with determining what you're doing. If you're in the business of selling something, then there's generally a cost that's associated with purchasing the product that you're going to be selling. So all of those costs that are associated with purchasing that product, that inventory that you're going to be selling, are valid expenditures of the business. But in addition to that, any other business expenses that you would incur, such as office supplies that you would utilize, the computer that you're using in order to keep track of everything, if you're driving to clients' locations, all of that mileage could be considered deductible. If you're paying to have advertising for yourself, all of those are considered valid business expenses. And there's any myriad of items that we could consider to be valid, as long as they're ordinary and necessary to operating that business.
So, Mark, let me ask quick if I can jump in here too. So, if somebody's operating a business out of their home like that, what about things like internet cost, gas, electric, utilities, because they're operating it out of their home and they do need those things to operate that business? Are some of those or portions of that thing, are those items able to be deducted as well?
Yes. The answer is yes. Those are certainly considered valid business expenses. And we'd want to look at those. We'd want to look at those and analyze those on a per client basis. And again, I'm a CPA, so I'm referring to it per client. But basically, each taxpayer needs to analyze the percentage that it's being utilized. Those are things that we want to consider when we're actually putting that on a tax return. So if you have internet that you're using personally, but you're also using it for your business, certainly a portion of it could be considered business expense, could be written off and claimed as an expense on that business. But we just want to make sure that we're being accountable for the percentage that is actually business versus the personal portion that we're using.
Okay.
Sean, you've been paying attention to these sessions that we've been doing. That was a great business question.
I have been paying attention, and I've actually been asked that more than one time, and that's why now I'm going to refer them to Mark and yourself.
So Mark, we're talking about sole proprietorship. You started to go down the path of self-employment taxes. Why don't you just touch on that briefly? Because this could be a great subject for another discussion. But just touch on that briefly and then go on to another entity if you would.
Certainly. I think it's going to lead into our discussion on most of the other business entities that are out there. So self-employment tax, if you are a W-2 wage earner, you're working for somebody else and you're getting a W-2, when you get your paycheck, you'll notice that what's on that paycheck are deductions not only for federal withholding, not only for state withholding, but in addition to that, you also have withholding coming out for Social Security. You're paying into the Social Security system. And you also have deductions coming out for Medicare. So Social Security and Medicare are deductions and items that you are paying into that system as an employee working for somebody else. Now, in addition to that, the employer who is employing you, they have to match that. So the employer that is paying your wages, they are also paying into the Social Security system and into the Medicare system on your behalf. So whatever you have withheld on your side, the employer is also matching. Well, when you are self-employed, sole proprietor, you are not only the employee, but you're also the employer. You're employing yourself. So self-employment tax in reality is the employee as well as the employer portion. You have to pay both portions because you're self-employed. So you're paying not only the Social Security for yourself as an employee, but you're also paying the Social Security as an employer. And the same thing with Medicare. So that's really what self-employment tax is. It's 15.3% of whatever your net income is that's passing through to you as a self-employed sole proprietor.
So it's based on net income, not gross income.
That's correct. Yes. So after all those expenses that we were touching on earlier, that the self-employment tax applies. Mhm.
I just learned something today, Mark. Thank you for that. Sean, see, even an old guy like me can learn. By the way, speaking of Social Security, I want to thank you two guys who are younger than me for contributing so that I can retire while you guys may be struggling. When I say this to students, they don't think it's as funny as you guys just did because that's a cold reality with them. It may not be there. But okay, so is there another entity that is similar to a sole proprietorship but may give me some protections, Mark?
Certainly. So if we're going to talk protections, why don't we talk about an LLC? An LLC is a separate entity from the person that owns the business. So we actually now have a legal business structure. We would file some documentation with the state, and that documentation would indicate that we are a separate entity from the business is a separate entity from ourselves as an individual. That affords us legal protections. If for some reason there is an accident that occurs on the work site, and again, I don't, we're making up a fictitious business
Sure.
here, but if there is some sort of accident or a lawsuit that takes place, the lawsuit would only be able to take place against the LLC, not the individual who now owns that LLC. Whereas with a sole proprietorship, well, it's kind of all up for grabs. If something happens with that business and a person goes to sue you, they can sue you for your personal assets as well as the business assets if you're sole proprietor. As an LLC, they can only pursue your business assets that LLC owns. So
Right.
that
So,
affords
Mark,
you yep.
I'm sorry, but this is America and we could sue anyone for anything. So we could get sued individually, but it's not going to go anywhere.
That's correct. Mhm.
Okay. Okay.
Right.
You can
And
see
again,
I'm a little damaged, so that's why I want to bring that up.
And again, we'll emphasize that Mark is an accountant and not an attorney. This is not legal advice. This is just advice from an accountant that may have some legal ramifications down the road, but it is not legal advice.
Sean, thank you for the disclaimer. I'm sure Mark is breathing a sigh of relief on that one. So,
He was
Mark,
holding his breath for a minute, so I wanted him to breathe.
Mark, you said you file with the state. I know you're not an attorney, and I'm sure you guys don't do that filing for clients.
Yeah, that's a legal document. Mhm.
Okay. Any ballpark of what that would cost?
Well, the state itself has a fee that they charge. As a general rule, I'm thinking like on an LLC. I think the LLC fee is now just under $200.
Okay.
Usually, you'll probably want to facilitate that through an attorney, and then the attorney is going to charge fees in order to set that up on your behalf.
Okay. So that seems pretty painless. Then what would be next besides an LLC?
Well, so another type of business entity is just a partnership. There's different types of partnerships. There's a limited liability partnership. I mean, there's different types of partnership structures. But a partnership is in the most simplistic terms I could give you. A partnership is two or more individuals that say, "Hey, we want to all go into business together." From the standpoint of being a partnership, though, there are not legal protections that are afforded to you. You are, as a partnership, you're actually treated similarly legally as you would be as a sole proprietor, unless you take steps like filing as an LLC. A partnership can be an LLC as well, just like a sole proprietor can. So the nice thing about an LLC is the fact that you can have one or multiple owners in that business.
And as a partner, I'm probably taxed as an individual.
As a partnership, you have to file a separate tax return. So now we're taking that next step up, and suddenly, well, there's a new conversation. There's yet another tax return that needs to be filed. Originally, when we were talking about the sole proprietor, everything went on your personal tax return. That doesn't happen with a partnership. We actually have to file Form 1065. Form 1065 reports all of that income. And then when we're done reporting all of that income, the income flows through individually to each owner. So your income does wind up on your personal tax return, but it has to flow through from a partnership tax return, partner tax.
Okay. So we have a sole proprietorship, which we don't really need to do anything, correct?
Right, that's correct.
Okay. Then we have an LLC where there's documentation that's necessary. We have a partnership, again, documentation necessary.
Yes.
What would be another example of a legal entity?
Corporation is going to be your next step. And with a corporation, there's two different types of corporations. There's a C corporation and there's an S corporation. Well, what's the difference? Well, I'll tell you, there's a big difference. So a C corporation, generally when you file documentation to be treated as a corporation, immediately you will be treated as a C corporation, unless you file additional documentation with the IRS to make an election. That election will request that you can be treated as an S corporation. All right, well, that was a lot of jargon. What does it mean? It basically means this. It means as a C corporation, you are a separate legal entity, but your separate legal entity is taxed separately. Okay? So if you have a business and you say, all right, I want to be a corporation, I'm going to be a C corporation, and I'm going to make income, let's say I make $50,000, that corporation itself has to pay tax on the $50,000 that it makes. So you pay tax at the corporate level. But wait a minute, I'm the owner of that business, and I'd like to make some money too, so I want to get money out of that business so I can have it for myself. Well, the only way to get money out of a C corporation, well, there's two ways to get money out of a C corporation. The first way is by taking a salary for yourself. So that salary for yourself is going to be taxable income to you. The other way that you could take money out of a C corporation is by giving yourself a dividend. And we see this with big businesses, right? Like Coca-Cola, AT&T, any of these large corporations, they pay dividends to the people who own that business. And anybody who owns that stock would know, well, I have dividends. Those dividends are also taxable. So we suddenly are dealing with an issue of double taxation. The money it comes into the business has to pay tax, but then when it wants to distribute some of that income to people who own that business, it's also taxed to the individuals. So we have a double taxation that's happening there. So longabouts, I think it was 1958, don't quote me on that, but I think it was around 1958, the Treasury Department recommended a new type of business. And that new type of business is an S corporation. An S corporation, it gets taxed differently. And the way it's taxed is similar to a partnership. So when I told you before that we had this Form 1065 and we filled it out and we reported all the income, but there was no tax paid. The income flowed through to the owners in that business, and they reported it on their personal tax return. Well, that's going to be the same way with an S corporation. With an S corporation, you have all of the income that's reported on the S corporation's tax return, but they don't pay tax. Instead, it flows through to the owners in that business, and the owners in the business report that income on their personal tax return. We've just eliminated the double taxation. So there is a great significant benefit to being treated as an S corporation over a C corporation. The challenge is not all businesses that are corporations can be an S corporation. There are certain requirements that have to be met, and there's a number of them, but the easiest one to know is if you have less than 100 shareholders, you can be treated as an S corporation. And that is a significant tax advantage because we don't have to pay double tax when the business earns income.
So if I'm starting out as a sole proprietor and then I start to make some money and I want to legitimize myself and I become an S Corp or an LLC, let's just say an S Corp. And then I get this brilliant idea that, hey, I could probably take investors on. So I could stay in that S Corp until I reach the 101st investor. Is that the idea?
That's
okay.
Right.
What happens when I hit 101?
When that happens, you are no longer allowed to be treated as an S corporation, and the IRS deems that you are now a C corporation. So basically, the decision is made for you that you are now a C corporation.
Okay. And fee structure for an S corp? You have any idea, Mark? You said an LLC is a couple $100 if you did it yourself. What about an S corp?
They're very similar.
Okay.
The pricing is similar with respect to what you have to pay to the state.
Okay. So help me out with this, because I know that I get a lot of questions about this, and I probably don't give the right answer. But, if it's a choice between an S and an LLC, is there one that's better than the other? And are you going to go out on a limb with this one, Mark, and give us a definite answer?
I'll give you a pretty close to definite answer.
Wow. Mark this down, Sean. Red letter day.
There you go. So remember we were talking a little bit earlier about this self-employment tax that you have to pay into Social Security and Medicare. So as an LLC, you're still paying into that Social Security and Medicare. It's all subject to self-employment tax. An S corporation, the profits, and I'm being specific in my terminology, the profits on that S corporation are not subject to self-employment tax, which means that the profits on that business, you can save 15.3% tax on the profits of the business. Well, there's a reason I'm being specific in my terminology. Jock, I got to cut you off. Not yet. You're an S corporation. The IRS deems as an S corporation that the owners pay themselves a wage. So if you have to take a wage and that wage needs to be reasonable, well, what's reasonable? Well, there's studies that we have to do to make a determination as to what's reasonable. But the long story, to try to cut this as short as I possibly can, the concept here is, as long as you pay yourself a reasonable wage out of that S corporation, whatever is left after you've paid yourself that wage, that's where you get that tax savings. That's where you don't have to pay into Social Security or Medicare. Because if you're paying yourself a wage, well, guess what? You're a W-2 wage earner, and you have Social Security and Medicare coming out of your paycheck, and you're the employer, so you have to pay in the Social Security and Medicare on yourself as an employee. So it's the difference between what you pay yourself in a wage and what's left over, where you actually get that tax savings.
So, the way my conniving mind works, Mark, is if I don't pay myself a wage, all of that flows down to me in an S as just normal income, correct?
That's correct. Yep.
Mm-hmm. Okay. However, when I turn 66, 70, 75, whatever the new number is going to be for Social Security, I've showed no income in order to be eligible for Social Security. Would that be correct?
That's correct. But it's not only is it when you retire. A lot of people don't think about Social Security in terms of, well, what happens if you become disabled? If you become disabled and you're not paying into Social Security, you're also not eligible for Social Security disability. So paying into Social Security is not just something to think about down the road, but it could be something that you may need to draw on tomorrow.
And now, as my accountant, Mark, you would say to me, well, let's kind of figure this out. If we buy disability insurance and we put this extra money in a retirement fund, maybe you don't have to pay yourself a wage. Or is that get kind of hinky with the IRS and them seeing that, hey, this is a thriving business and the owners aren't getting paid?
Yeah, you are required to pay yourself a wage.
Okay.
The IRS will mandate that you pay yourself a reasonable wage based on the services you're performing for the business.
So then, based upon myself, the IRS would have no problem saying he's an idiot and he really shouldn't be earning anything. Would that be correct?
No.
All right, Mark. So are you leaning toward, which one are you leaning towards, the sub S or the LLC?
So my answer is there's kind of a cutoff. So basically, when I look at it, excuse me, I look at a couple factors. If we have a single owner, okay, if we have a single owner and they're trying to make that decision, well, the single owner can put everything on their personal tax return, so they don't have to file a separate tax return. The single owner also doesn't have to pay themselves a wage, which means they don't have to worry about filing payroll tax returns. The minute we start thinking about the S corporation, we have to now understand payroll law. We have to file payroll tax returns. We have to file an additional income tax return for that corporation. There's lots of additional burden on that company to have to file all those forms. And as a general rule, and I'm an accountant, I see this all the time. As a general rule, that's something beyond the scope of what they want to, or what they can even understand to do themselves. So they generally will pay an accountant. They'll pay somebody else to assist them with that. Well, I'm not going to make a recommendation to my clients to say, well, we can go as an S corporation and you're going to save taxes, but you're going to pay all that difference to me. If I'm getting your money and you're not saving anything, there's no benefit. So there has to be a happy medium. And generally, and again, this is a general rule, but as a general rule, if your net profit is somewhere in the range of $35,000, $40,000 net profit, that's after expenses, it's generally worth your while to take that step to look at being an S corporation. If your income is less than that $35,000, $40,000 range, it's usually not going to save you enough money to make it worth your while.
Okay.
How's that?
Well, that's a pretty good answer to me. That's what I think.
I'm very surprised, actually. But so Mark, I guess I'm running everything through the business. So obviously my net profit, income less expenses gives me my profit. So I could be I could be having expenses that not are of a personal nature, but kind of lean towards that, reduce my net profit, and actually put it below that $35,000 threshold that you mentioned. Is that correct, or am I conniving and trying to see the gray in this area?
Well, if they're ordinary and necessary, valid business expenses, then certainly you can. What tends to happen, though, is we get to a point to where business starts to grow, and there's just not enough expenses that we can incur that are valid enough to be able to write off. Right. And that's when we get to that point where we have to say, well, maybe it's time to flip that switch. And I actually have a happy medium for you, Jock.
Really?
I do. So as a general rule, I'll recommend when a client wants to set up a business entity, I'll generally recommend that they set themselves up as an LLC, because it still can go on your individual tax return. And so we don't incur all those additional costs. We also, because like you said, shucks, we don't know how successful this business is going to be. Why do we want to go through all that additional burden of filing those extra tax returns, filing those payroll tax returns, having to understand payroll law? There's no reason to incur that additional burden. So I generally would recommend go ahead and set yourselves up as an LLC. Once you start to see the profits ticking up and you realize that we can generate some savings, tax savings, and as well as what we're having to pay out for the accountant to assist us. Once we hit that point, we can flip a switch. There's a form that we can file with the IRS to tell them, from now on, why don't you treat me as an S corporation? There's no extra form that has to be filed with the state. The state can still have us treated as a LLC, but we can flip that switch and become an S corporation and get those tax benefits. So it's real easy.
So, Sean, do we have a couple of minutes left?
Yep, we're running towards the end, but yeah, we've got a few more minutes left.
All right. I just kind of want to recap, Mark. So we have sole proprietorship, don't need to do anything.
Correct.
Income's going to go on my personal income, my personal return.
Right.
Okay. I can choose an LLC, an S corp, or a C corp, or a partnership
Yeah.
in order to protect the corporate. Used to be called the corporate veil. You can't pierce the
Right.
corporate veil. So
Right.
those other entities does that. The partnership does that also, or not
No.
necessarily. Okay.
Not
So
necessarily. Correct.
okay. So sole proprietorship and partnership, there seems to be some personal liability, possibly personal liability there. Okay.
That's correct. Mhm.
But the C corp, S corp, LLC, I am protected. I'm protected personally under my corporation. Tax wise, corporate C corp's going to be higher than an LLC and an S, and the partnership, or not necessarily.
Partnership is treated the same as a sole proprietor. You're paying self-employment taxes on that. So
Okay.
S corp is going to be the greatest tax savings. Period.
Okay. Wow.
As long as you qualify.
That's correct. Yes.
Well, you know what? I just found out that we have a friend in our accountant. I think that's probably the takeaway for this whole thing. The accountant's going to help us figure out what the best way is, and then figure out the best savings. You know, Mark, you must be loved by your clients
Oh, I
because
hope
of things like that. Well, I love you, but that's a whole nother thing we can't talk about here. Sean,
Yeah.
anything else that you might want to add?
No, it just sounds like, I mean, if you're thinking about starting a business, the best thing to do is to sit down and talk to a group of people. You may want to, contact an attorney. You may want to contact a CPA or an accountant and just go over all this stuff before you actually go and start the business. I think a lot of people do it the other way around. They start the business and then they go try to figure these things out. If you're really serious about starting a business, it sounds to me like the best way to do it is to do your homework first. Maybe have a meeting with an accountant, have a meeting with a lawyer. Make sure that you're going into this in the right mindset and you've got your ducks in a row before. Otherwise, like you said, Mark, if you're a sole proprietorship and you go out and let's just say you have a tree business and you're not properly insured because you didn't contact a lawyer first, and a tree falls on somebody's house, and now they're suing you because you have a sole proprietorship instead of an LLC or an S corp that would have probably protected you had you done your homework. And that's just an example, but it sounds like doing your due diligence to start a business really is going to help you in the long run. In just from what I've learned today.
Definitely.
You know, Sean, here's the only issue with that, and your point is very well made, but there's a credo among entrepreneurs, and that is fire, ready, aim. So, we're out there doing without thinking of all that other stuff.
No,
but you're absolutely right.
I completely get it, and I'm from the school of I would want to do my homework first, and doing it what you just said. I know a lot of people that do that. I know that I agree with it, but I think that's why it's as Mark said, everybody's situation is different. You've got to take the time to do that, and whether you start the business and then do it, at some point in time throughout the process, whether you start it or before you start it, you should sit down and have these conversations.
Absolutely. Absolutely.
All right. Well, thank you, gentlemen. I appreciate your time today with this Small Business Development Center. Jock, thank you so much for your time. And Mark, I know you're a busy guy, still probably wrapping up some business taxes here around this time of year. So thank you for your time as well.
Absolutely. Thank you.
Thanks,
All right.
Mark.
Thanks so much.
Sean.
Have a great day, guys.
You too.
You too.
Bye-bye.